Jordan, so good to see you. Today, we're going to talk through three financial planning and investment opportunities in a down market. Recently, stocks closed out their worst quarter since 2022. The S&P 500 and the Nasdaq logged their worst performance since Russia's invasion of Ukraine. So before we get into how to take advantage of a down market, I do want to do a deeper dive into what exactly is going on. And so I do want to talk through the S&P right now because you and I have talked before about the concentration risk. 80% of the market's movement is due to only 10 stocks. Now, specifically, the Magnificent Seven have lost more than $2 trillion since the start of the year. So what do we need to keep in mind when we see this much red on the board? And this is looking at a 1-month performance.
Yeah, a lot of people, they see this chart right now, or they look on the news and they have all the headlines. But the reality is the headlines, the news, even looking at this, a lot of it's sometimes a scare tactic, or it can make people uneasy. The reality is, if you look at historically and you look at the current market conditions, it's just because of the overweighting of those 10 stocks, taking up over 80% of the market. If you look at value companies, they're actually positive for the year to date. The key is to make sure that you have a plan and you're not being, misled or kind of being scared or thinking negatively about what the headlines say. You have to take that back to your personal situation, to the plan, and make sure it's in line with your overall risk, because that movement of those 10 stocks can make a big impact in the S&P. And S&P 500 is 500 stocks, but they're not equally weighted. So when those 10 go bad, it goes really bad for the overall market.
Right. And it makes sense when you kind of see it laid out that way. That's a good reminder. All right. So now let's get into those tips to take advantage of a down market. First is putting your extra cash to work. A lot of us feel better when we hoard our cash, but that is no way to build wealth, especially now.
Correct. When the market goes down, I think you mentioned, you opened this, you used the word opportunity. It is an opportunity to take advantage of the market dip. And when the market's down and you have cash on the sidelines, that's a great time to invest maybe in the market and buy at a lower value. So when the market recovers, it can kind of grow and outpace inflation. You show this chart. Some people are savers by nature, but if you cannot save your way to wealth unless you put that savings into long-term growth strategies. Because if you look at this, if your savings are in bonds, you're barely keeping up with inflation. Where if you're in the market, not only are you keeping up with inflation, but you're exceeding inflation, creating more purchasing power and creating a better lifestyle for you and your family. So if you have cash, or sometimes I call it lazy money that's just sitting there, get that money back to work for you. Dollar cost average, invest in the market so that you can benefit from those long-term gains. Because the market, it doesn't always repeat itself, but it does seem to rhyme. And 100% of the time, the market has recovered and set new and newer highs in the S&P and in the overall markets.
All right. So our second opportunity would be to take advantage of these stock losses and consider tax loss harvesting. Can you explain how this one works, please?
The markets are down and I want to take advantage. Is that a good thing? Well, it is a good thing if it's in a non-qualified account, maybe in a brokerage account, because you can kind of sell off some of those stocks or some of those funds, and then you have a loss showing on your statement, which then goes into your taxes the following year when you prepare your taxes, that you can take a loss off your tax return. So you can take advantage of the loss by getting a tax reduction when you file your taxes. But just because you sell it doesn't mean you want to put it back into cash and just let it sit there. No, we might sell maybe this tech sector. Maybe we buy a different sector that's not the same fund, that we can still be exposed to that kind of same amount of risk. But because we sold that one fund or that one stock, we're able to take that loss, but we can still be invested in the market and not put it in cash and benefit from the long-term growth of the market.
And then last, explain why Roth conversions make more sense in a down market.
I don't know about you, Aaron, but I like to pay when I buy something. I like to pay in a lower value versus a higher value.
Right. Buy it on sale.
Same thing with taxes. When they're on sale because the market took a dip, that's the time to pay the taxes out of sale at a lower value. And when that market recovers, guess what? Since you already paid that tax, it's tax-free to Roth. And all that growth is now tax-free forever. So when the market dips, that's a time to take action. That's an opportunity to maybe do a Roth conversion, to maybe do some tax loss harvesting, to get that cash to put it back in the market so you optimize on that opportunity.
Well, Jordan, I'm glad we got to talk this through because a lot of us, I feel like, are a little bit tentative. It feels hard to sometimes know that there are opportunities when we feel this anxious. But I know that we've broken down some of these opportunities as well separately in other videos. So just a kind reminder to everybody to check out your YouTube page where they can learn more about Roth conversions and tax loss harvesting. But if somebody would like to speak with you or your team directly, how can they get a hold of you?
Yeah, we just talked about a few segments, but the reality is it's hard to do all these 3 segments unless you have a plan. So we
Yeah,
really stress the importance of having a comprehensive plan.
right.
So when the market dips, you're not worried. We have clients that call us. It's now the time to do a Roth conversion. It's now the time to get money more aggressive. And that's the mentality we have to have. But you can't have that mentality unless you have a plan. So to start that plan, they can call our main number, 847-499-3454. We can get to know you, get to know about your goals, what you're trying to accomplish, and then start putting a plan together to give you peace of mind and confidence.
Great. Jordan, thank you.
Thanks, Aaron.